welcome to today's more important analysis videos with me, Richard Perry, market analyst at Antic Markets. On Wednesday, 26th of April, we've seen a fairly sort of quiet early morning open really to trading. Nothing too significant in terms of direction on equities. Seems to be that European equities are starting to stall a bit in the wake of that huge rally that they saw on the French presidential election. They've just started to sort of settle down a touch. That's despite that we saw gains on Wall Street last night again. Let me show you the factors that I think are affecting markets now. This is the US 10-year Treasury yield, which has sharply risen, and that's come as safe haven plays have just started to safe haven plays got impacted by that French election, and the Treasury yields going higher is positive for the dollar, but as the euro had been strengthening, the dollar was under pressure. Dollar under pressure on the trade-weighted factor being that the euro is a significant significant weighting in that trade-weighted dollar. However, with Treasury yields starting to, certainly Treasury yields being higher, and also the euro starting to sort of settle down a bit. I mean, it's a little bit lower today, to about 28.30 ticks down. You've started to see the dollar rally a little bit. Now, this rally is coming as, look at that big yellow uptrend line there. That's the long-term uptrend for the trade-weighted dollar. So that's coming basically on that support. So that's interesting. You've got also equity markets that have been strong on the back of this volatility, or VIX volatility. S&P 500 options sharply lower in the recent days. But are they a little bit stretched now to the downside? You could argue they are now sort of levels at which, yes, the market is certainly confident, arguably a little bit complacent perhaps, and it'll be interesting to see how that sort of impacts on markets. But the euro is started to just settle down a bit, maybe a little bit of a correction as this yield spread between French-German bonds have started to just sort of again settle down a bit really. So there's some sort of consolidation factors going on in these markets at the moment, and I think that's sort of playing out at sort of the equity markets and also forex markets as well. Now, that's a little bit early for that one, so I'll go back to that. Now, in terms of what we've got to look forward to today, we've got the EIA oil inventories really is the only real thing to factor in. You've had Aussie inflation today, bit mixed, a little missed on the CPI, but just mildly higher, mildly ahead of estimates on the trimmed mean, but that was still down from 2%, so the market's taken that as a bit Aussie negative. But much beyond that, you haven't really got anything really until this afternoon in the EIA inventories. Now, inventories again expected to have a drawdown. Now, this drawdown is would be a third week in a row of drawdowns in the US, so that's interesting. So would the oil price start to find a bit of support on that? It has started to settle down a bit yesterday. Possibility that it could start to also sort of find a bit of support again on that inventories. Now, last week the gasoline inventories were higher, and that hit the oil price, but if the inventories are all in drawdown this week across the distillates, gasoline and crude stocks, then we could see a bit of support for oil. So that takes me on to my chart today, which is the dollar Swissy. Now, the Swissy has been in this trend lower for the last sort of, throughout 2017 really, sequence of lower highs, and that's sort of been accelerated through April. And it seems to be that the Swissy is coming back towards this 98.50 level, which is sort of a long-term, you can argue a long-term basis of a pivot, really. It's consistently coming into sort of support and resistance, and throughout this year it's been 98.50 has been the big level that the markets have come back to. Again, that hit on Monday before the intraday rally, but the market fell over yesterday, and I think that it would suggest that rallies are being sold into. And I think on the hourly chart you can see that, whereby the sort of sequence of lower highs, momentum indicators coming back towards sort of the 50, maybe 60 area on the RSI, coming back towards neutral on the MACD lines, tends to be seen as a chance to sell. And this we've had a little bit of a jump today, 99.45. Again, 99.50. I've talked about that previously being a pivot as well. 99.50, and I think between 99.50 and parity, I think that's a sell area now. Anything back towards that old downtrend, I think, is a selling opportunity, and I think this little jump towards 99.50 today is a chance to sell. So I think we're going to be putting pressure back on 98.50 in due course on the dollar Swiss, but anything in between sort of 99.50 and parity, I think, is a selling opportunity. So initial resistance really sort of coming in around 99.50, 99.57 was that reaction high yesterday. 99.80 was the post, was that rebound high from Monday. So obviously good luck in your trading today, and I'll speak to you later. Thank you.